We're obviously in DEFCON mode 4 stage, not 3. We're beyond 3. We're almost DEFCON 5 phase. And actually, one of our students and comrades in arms, Jeff Scott, Friday, I'll never forget this. He says, don't you want to have some puts on just in case the market opens up 500 points lower on Monday? And, you know, the NASDAQ, these dots right here, that's limit down. And the limits, the circuit breakers have kicked into high gear. My comments on Friday was that the way the volume and the action was on the Russell, I was more inclined to be long, and I did buy a few calls, and I didn't go heavy just because of the fact that you never go heavy on a DEFCON 3 mode. Now we're in DEFCON 4 mode. But honestly, when we take a look at my analysis, which, you know, since July or even earlier, we were calling for a big move to the downside. Here it is. And I actually got, as you know, flat with most of my shorts except for Tesla, which I still have a few of those. So the good news is we're still short the market in a degree. And I think Tesla is going to come in pretty wildly since it's trading at 210. So if anyone followed us on Tesla on the put options there, then you're going to pick up some equity. If you followed me on lightly buying some of the ES spider calls, you're going to take a hit and going to want to wish you had some Tesla calls. If you bought some of the IWM on the Russell on Friday, you know, I think this could be a little bit further downside in here, test the moving averages, and then bounce. So it is a light position. The good news is I have duration. Also, the volume action, and of course, this is a weekly chart, so we're going to have to really watch the week. But looking even at a daily chart, if we go back in time, looking where we're at, of course, the day's not over, but this line in the sand here does represent that weekly moving average crossover. If it wants to get you know, and as sometimes markets do, they go down a little bit further than we all expect. So that would be another 60 handles in the Russell to the downside. So I want to watch today, and obviously, you know, at this point in time, we will get a bounce. And I sent out the weekly thoughts and observations to everybody, and hopefully you got that over last night. So the key is, from where does the bounce come from, though, right? So if the bounce is going to come back from where we bought some on the close Friday, and that's the extent of the bounce, meaning if we go down here and then bounce back there, that's not even a break even because we're going to lose some theta. So I am looking to scale into some long calls, and on the Russell, the IWM, somewhere down here, and possibly this morning by about 10:30, 11, let's call it 10:30, 11:30 time frame again, because this is, to me, more of the not just the margin call liquidation, but this is, and I don't think this is the global sell-off that it's the end of the world. I don't see that quite yet, to be honest with you. I could be wrong on this one. If you want to take a couple days off, take a couple days off. It's certainly not an environment for small account, small lot traders to be dealing with the futures. So if you have a small account and you're day trading futures, while it might seem exciting, this is the kind of moves that, you know, can pick you up some quick dollars, but live by the sword, die by the sword. May I also point that out to you. And I would certainly, just from the extent of just points of interest, we can throw pretty much every pivot analysis. This is the option expiration has a target of 1,073, only because we just expired, and so it's giving another target down here, by the way. That's the JP option expiration pivot for the Russell. Quarterly, we've gone through it. Monthly, we've gone not quite through it. So we've got monthly, well, yeah, we went not just through it, we went through it today by a hot knife through butter. Weekly pivot, you know, it's somewhere in here. So pivots at this point in time, I think, is irrelevant, but what would be relevant is to watch not just on a weekly basis in the weekly analysis, but watch also the daily analysis. And I think the daily analysis if at the end of the day with this big dramatic sell-off and we don't see that significant volume, I'm looking more like the, after maybe a week or so. And remember what happened last September. It's going to take time for bulls to get their affairs in order. Their margin calls, their mindset needs to get right. The small specs in the COT, they were short, as we all have seen us put, or they were, long. The COT shorts showed that the small speculators were long. So anyway, I would say this, first and foremost, last week we gave a list of stocks to be shorting and a list of stocks to be buying puts in. And so last week, if you are a planning and scanning and you only show up here for planning and scanning, hopefully that served you well. Long the gold, long the euro looking to get up to 115. But now I'm starting to say, okay, the gold market, gold already hit its objective. I took profits on gold, and gold actually, to be honest with you, when I look at gold not moving today, in the light of the fear factor, and the euro currency, of course, did exceed the 115 level. We're at 116.20. It blew through everything, and that's exciting. But, up in here, by the way, and I'll get to the euro in a second, just for you guys, there's a weekly pivot resistance up near, if you want to see this real, and I can't share it with you, but if you're long euro or you're in the FXE, which was another one that we talked about as well, then you should be doing pretty good there. The FXE 116.31 is the weekly pivot, and we're there blowing through it right now as I'm speaking to you. The Japanese yen was another one that we talked about from a long perspective, which I think a lot of people thought maybe we were, I don't know, crazy. But the Japanese yen has certainly just blown through. It's at 84.33, and we talked about the FXY for long positions there. So while maybe we're not short S&P outrights from the high, we are in peripheral. You should be, at least we analyzed and talked about, to get into peripheral markets such as long some of the currencies, specifically the yen, specifically the euro. The yen actually is up the most on the board, by the way. It's up 3.8% as I'm speaking to you right now, hitting 85 even. It's exciting watching this market blow through the top here in the yen. So if you are in any of the FXY, which were the exchange traded, the exchange traded fund on the Japanese yen, that might seem just a little bit. Here we go. Bear with me a second. Here we go. All right. Needless to say, what I wanted to point out to you guys is, while the equity market is having a slight downturn, I don't think the downturn is going to be long-lived. At least for the next week, we could see some back and forth price action. Some of the peripheral markets is what I'm trying to talk about, such as, gold. One would expect gold to be, I think maybe it's coming, but if the market is going to be continuously negative, I think gold would have had a bigger move on better volume. So it didn't. When we take a look at some of the other markets, we can't even get up yet. And of course, let's give it a couple more days. But we had stiff resistance at the 3-month pivot resistance. This last conditional change, this line in the sand that I've got in here, that's been in there for a while. Somewhere up in here, guess what? I think gold maybe runs its course. Maybe we'll look at this by like tomorrow's close, or see how first, one day at a time. Today's close, tomorrow's close, things of that nature. So I look at the gold market and I go, that should be going up. As I wrote about over the weekend, and I want to get into this quickly because if you are in any puts, if you are short anything, such as Tesla, for example, as it's falling here, what we need to do is immediately start to price out and place open orders before the market gets wild. Because many times what we have seen is that you cannot, your order platform will be so backed up with your brokerage firm. Try to put in orders ahead of time. Okay? So that might be the place to be right now. All right? And that to me is what we need to do. So if we are in any of the short positions, please start to put orders in immediately to expose yourself to getting taken out with a significant profit. All right? So like Tesla, I would look at Tesla. If you're short Tesla, I would be looking at the, if you're in the 220s puts, the 210 puts, anything in that range, I would put something ridiculous like starting with like $20. All right? $15, something like that. I'm not sure exactly where it'll open. Currently it's at 208. But you got to start somewhere. So I'm not sure what everyone bought into. At least we had Tesla, you know, pretty much nailed down. When it opened up on gapped lower, we were trying to get out at some of them at when it was 236. It ran back up. I got out of half of mine. And I also had made mention, if this thing closes back down to the lows, look out below. So A, B, C, D wave, you know, we might exceed that downside. And remember what we were looking for in Tesla. I'm not sure we can fill that gap, but boy, anything's possible. The volume was light, so we're going to be opening, or currently it's trading here. So you figure September options, 25 days to expiration. If you are, just for an example, in a 220, you're intrinsic here by $12, right? So at least you got $12 owed to you, plus a little bit of increase of implied volatility coming your way, plus there's still a little theta coming your way. So I'm thinking more like, I think realistic 18 bucks on the, and you might hate me for that, but taking something off the table certainly is exciting. All right. So I would go in that route. If you want to just, if you're only in a few of them, then, you know, cover some and leave one on just in case the stock goes back down to, you know, 118, and then you don't hate me for getting out too early. Okay. So anyway, that's Tesla, and it's exciting times. I just think that the market here, if we get into the excitement of what's going to happen, looking at the, as a quick review, it's 916, and do you know where your money is, as they used to say on TV? And kind of, yeah. So it's exciting to have some be a part of this and not be extremely long the market. Starbucks, for example, Starbucks is going to get whacked. Wynn's taking a little bit more of a hit than I actually expected. I think there's going to be some really exciting opportunities coming down the road. Today is a different story, folks. Today is the mass hysteria liquidation we never saw this coming move. So price out, in my experience, even in the crash of 87, which I was kind of in for, I would say this is more of a, you better have some orders in, because I guarantee you on any given normal day that has increased volatility in the market, some order platforms don't go down or don't work properly. So prepare for that. I think we've been trained. We've had enough experience. Take this advantage of this time before the market. Start placing some GTC orders in there. Get them in. Get your orders in. Start looking at the very least, if you're in put options, I guess that's what I can kind of focus in on. Don't worry about buying opportunities right now. I would look more at taking care of your inventory of any shorts that you have. I've been liquidating the short positions, and, you know, for good, bad, or indifferent, maybe I could have held on. I did test the waters lightly Friday as we were near support. I do have a little bit of short exposure on, which is going to help tremendously on a big move like Tesla, just to be exact. and we'll go from there. I think that the weakest market is going to come in NASDAQ. Strongest market is going to come in with the Russell. This is the weekly chart on the Russell. When we take a look at where we're at, we've done this kind of analysis where we're going to get probably with the Russell all the way back down. I think obviously you could see that a 75% retrace from the lows of 14 up here. And we can use another one where we just take the lows from, if you want to go with the 2011, which was the last correction low. Really, we've had a correction, which was last year. So over time, I mean, gee, if we want to take a correction off of that low, this thing could get a little bit more serious. I think so from a technical perspective, though, the market, as you see with at least the Russell, it has corrected along the way. We have seen after the 11, it rallied, it corrected, it rallied, it corrected, it rallied, it kind of corrected, it went sideways, it went down, it rallied marginally, it should fall the least. The AD lines, we'll check this out, but on a weekly basis, they made newer lows, but we're starting to base out. Volume was light on this one, and we kind of get a little seasonality, so I'm more impressed with the Russell than I am anything else. One more comment is that on Friday, I made mention, I said, if this stuff is for hedges, leave those alone. I said, speculators is a different story, but if this is for hedges, to leave those alone. So I think I try to look at my own self and I go, wow, what's the best? Could we always have traded better? And probably, are we doing okay? Yes, we are. And of course, the markets, as a life lesson, the markets will always move when the least amount of people least expect what's coming. This morning's action actually does, and this is being recorded, today's action and this magnitude of decline today, this morning, does take me by a bit of surprise. I think we were kind of prepared for it. We were prepared for it in other markets and looking at other ways to trade it. But to be honest with you, hopefully you don't think I'm making excuses. I'm just trying to say what's the best way to trade this thing. Anyone could say, hey, we told you so. And we did tell you so. I mean, we've been telling people this thing's going to correct. Is it going to be a 5 to 8% correction or the 15 to 20% correction? So at the end of the time frame, we could say, well, so far when we change this chart, we're already at 12% right now, guys. So we're getting damn darn close from the correction in the marketplace. We're starting, we've done this exercise, start picking spots of what would be a 20%, a 19, an 18, that type of thing, and then adjust orders accordingly. This is an index liquidation. All the stocks, a lot of the stocks are down. Starbucks, for example, SBUX, we've talked about not wanting to own that at 60 bucks. I just go back and listen now that it's trading at 48.79 in the pre-session hours. I'm kind of liking Starbucks if it gets down another $3. If it got to 45, I'd be a kind of a buyer of Starbucks at 45. That gets me back to the beginning of the year before the 2-for-1 split. That's still a $90 stock. That's still kind of, maybe 45 might be a little expensive, but for a bounce, any further declines from here, I want to be, from here, from right here, from this 12%. So between 12 and 19%, I want to be a buyer, and I'll be more of a buyer, I think, of the Russell than I will of the ES. So hopefully that's some information, because it is going to be kind of fast, furious. If you want to price in for a bounce, you got to go with really some really low ball numbers to be a buyer. That's what I'm saying. And you better have orders in before this thing gets down there, because you're probably most likely going to have a hard time placing orders and having orders accepted. Okay? So that's one of the things that I would have to, really advise everybody. It's going to be tough, most likely, to be a buyer of stuff. So, for example, I think if you look at the S&Ps, can the market get back up to 192 by November, for example, or 190? And, those options on the spiders are bid 11, offered at 14. I'd put an order at maybe on those at around $5. So that's what I'm talking about, lowballing. So something of that magnitude to lowball, you're talking, if that's possible, that's what you go with. And you place those as a good till cancel, so it takes it and it's in the order system now. I don't think a lot of people, they wait. So the small speculator and the individual trader, they're not seeing this. They wait until they see prices. And you and I have been conditioned this whole summer to know that sometimes your order entry, it's going to get tied up because everyone's waiting to see and they're looking to place orders. So in any event, I would start to look for spots to stuff that you like, that you want to get into, and follow that mindset. And on the other side of the coin, look for placing orders on the stuff you're short and do that. That's the message for today. You really have to watch and wait for a buying opportunity, because now you're getting in the way of institutions. Look what just happened in the euro currency in just a few seconds. I mean, obviously someone had a major problem. When I say that markets overshoot their expectations, the euro currency just hit damn close to 117. In fact, I'm sorry, it hit 117.18. Excuse me. So it's going to be tough to, you don't want to be like taking a sell signal here in a euro currency when everyone and their brothers and sisters were short that thing and they're getting squeezed, right? Anyway, so that's kind of exciting news that hopefully you guys got some of the euro currency, or at least the Japanese yen off, because really that kind of a big move, an exciting move. So here's the next thing I wanted to share with you guys over here on the newsletter page real quick for the weekly planning and scanning. It's more like, boy, we probably should do a midweek session and an emergency midweek session, because Jackson Hole is coming out this week, and the Fed's going to want to say something. The market's already got a meltdown. So what would it really matter? Really, what would it matter for the Federal Reserve to come out and talk about, we're concerned about a market meltdown? Sorry, a little late, already happened. The Japanese yen, by the way, it just, that one too just blew up straight to the moon. I sent out that planning and scanning to you guys last night. If you didn't get it, then you need to let us know. But we did form a weekly high close doji in the yen. We've been talking about the yen. I told you about exposure to the yen. We had a daily high close doji 4 days ago. We talked about the Japanese yen, the seasonality, and this should not be a surprise, and you should be making money there. So as much as the yen, the S&P is down 5% right now, think of it this way. The S&Ps are down 5%. If you're in the yen, it's up 4%. So you're literally, if you didn't get short S&Ps, but you got long the yen, you made money. You're in the same trade pretty much. Okay, so think of it that way. And then, again, make sure we got 3 minutes, so I'm trying to speed things up here because I'm going to have to take care of a little bit of watching some order flow as well. This is the bonds. Relative to the notes, the 10-year notes have exceeded and have outperformed the 10-year bonds. That's why we're not seeing, while the knob spread, the notes over bonds, is not trading up here. We did overshoot the mark at 32.27 here, 33. I think on an intraday basis, the knob spread, let this thing die down. It's in panic mode. But look, guys and girls, the bond market is not, again, the bond market is underperforming relative to the notes today. They're not buying the long end of the yield curve right now. So what that kind of signifies is that they're not, they're really not looking for and this is a 60-minute chart, as I always teach, especially in the spreads, this is kind of an indication that, well, maybe things can change. Let's wait for a delayed reaction. But boy, we're not accelerating into the 135. That could change, but the bonds certainly should have been, if people were fearful that this was going to be a long-lived decline in equities, then the bonds would be outperforming relative to the Treasury notes. Watch for lower highs, lower lows, and I think that is another sign. More than likely, we will see the McClellan oscillator, another tool, which at this point in time, let's go to when we've got 1 minute. All right, 220 Tesla puts well beyond what I thought. 210, they're at 2105, 2180. 210 are at 1617. So if you place an order and the market's bid higher than your limit offer, you should get, if all things being equal and platforms being fair, you should get better orders. Any event, the McClellan oscillator is going to flip into, I'm going to say probably today on the opening, I'm going to bet we're going to be down here. So that would be at one of the most extreme level readings since even we are at 405 on an end of day basis, somewhere 450, something like that. This is the level that we get into panic mode, somewhere down in there. When you get into panic mode, you know, typically that's the buying opportunity. 220 puts 36 bucks. I hope everybody, baby, that's a ring the register on the Tesla, okay? So hopefully you guys did well with that. Should not be a surprise. The only surprise I got here in the market is today's circuit breakers, and we need to talk about the circuit breakers. But the currencies, real exciting stuff, and I hope everyone benefited from that. Now we'll have to see I'm kind of way off on the low ball, but we'll see. But I'm kind of way off on the low ball on those spider calls for November with 88 days to expiration down here. Just to let everybody know, I'm right now. I'm trying to pick them a 610 at 1086. Those are the 190 spider calls. Looking at the market, the IWM, November going into the IWM at the 1. Wow, they are not wavering. The bid and asks are ridiculous on these. When I say ridiculous, there is no someone just did a going way out there, 53.16 on the, that's way out of the money for me to even consider. Yeah, these bid and asks are outrageous, ridiculous in IWM and Spider. And you guys can see that for yourself, and maybe that we need time to catch up. So anyway, you have bottom feeding orders down there. You had offers in to dump and take some insane profits on Tesla. And I keep mentioning Tesla because, I mean, we really did at 197. This is a fabulous day. It has been the chart of the week. It's been the chart of the, I don't know, it's been on the board, and it is extremely impressive. It's almost boat buying material. And you can see the spread chart, how the spread on the Russell is just blistering straight to the upside, because the Russell, even though it's down, and everyone can see this, you don't need me to tell you, the performance on the ES, I mean, obviously the Russell is not, I mean, they're all down about 7%, all the indices here, but it's less, what's the word I'm looking for? Actually, the Russell, and we've, you know, this is the area that we can come into with support down in here. So this is an area, I mean, bang, I hate to tell you, this option expiration, this support, but it doesn't come in, again, this low comes from looking at not the absolute low, but the moving average crossovers, just another little technique that we do time and time again. And unfortunately, some of these Russell options are pretty damn expensive. So it's tough to get in on the volatility is going to hold their value up tomorrow. The next day, if this thing stays down here, the volatility is going to shrivel as everyone scratches their head and says, what do I do? And I think in my experience in a market crash, you still, you know, getting into the market is looking to make money, and that's an act of greed. Okay, right now it's more like capitals. You can't do anything if you're long the market and you got problems. You're going to have to sit through this. And I don't think anyone in the market here, even if you were long, and the comments were last week, if you got puts on and that's a hedge, you leave those alone. But if speculation and the market's going down and you're short for profits, you take something off the table. If you want to nibble at the market, you nibble at the market. That's the best way I've been known to trade these types of crashes, and I've lived through every crash since 1984, pretty much. I think that this market here is presenting you, and it presented us fantastic. I'm tickled pink. I'm ready to jump up and down and do an Irish jig right now. This was exciting. This was very exciting. And actually, did everyone get some decent fills? Did everyone get decent fills putting in orders in beforehand? Did you get some little Easter egg presents there? Little Christmas presents? Labor Day presents? Nobody? Everyone's busy watching their own account. All right. Well, anyway, that would conclude. Man, I am. That is awesome. So anyway, I would love to tell you, you know, the funny thing is liquidating the puts, I got better trying to buy, and maybe I undershot the market here, trying to get long. It just didn't happen. The funny thing is they aren't touching longer duration like January calls. They're not really, well, they're not trading, so that would be one. And also, please be aware that sometimes your platforms, I don't care who it is, this type of action is going to bog down day trading. You might find yourself entering orders, the system goes down, it wasn't accepted. There's all kinds of, today's the day. If there's going to be a Murphy's Law problem, today's that day. All right, well, that would conclude today's planning and scanning. I think you got the message what to do. It was kind of exciting. Looking at, like I say, markets sometimes overshoot on a weekly chart. Here's Tesla. Here's the gap down here. Did it come down and fill the gap? And the answer is yes. Did you get out? Yes. Is that maybe it for some of these markets? Well, it's only the first test, and it's still early. So that's why you cover things down in here. But I would say, I don't know if any of you guys see this, but boy, I'll tell you what, for a market to come down and not make a big low like that, a little bit of something intriguing. We overshot the mark. You were able to profit, and that was the chart on Tesla, the big zone of redness a week ago. If you could just turn back the clocks, I think our analysis was just 4,000% dead ass accurate. Can't really beat that one. The only thing that I wish I did when I came out last week and said to the list of stocks to sell, like GoPro, was to hang on just a little bit longer. But GoPro down in here, I think they will find some value, at least coming back. And look what they haven't even come in and test, not the absolute price, but the moving averages. So I mean, this is not a stock. Here's your moving average valuation, your moving average valuation. I'm not getting long that particular name. I just wanted to go through and give a quick review of some of the names. If you're in the FXE, the euro currency, the euro at this point in time, the market has definitely, when we said it would take out that level and break out and get up to maybe test that resistance, it blew through the resistance at this point in time. Personally, this is not one to hang with long. Option expiration, and again, this was based on Friday's close and the time period from expiration to expiration, but it is a resistance target that we seem to respect. Sometimes you could see the option expirations do respect, the market price respects those time frames. And looking at anything in here, if you're long the FXE, I would not be long anymore, okay? I would be out of FXE. I would also be, ironically, and I am flat gold. I mean, this is the one that you would think would have been up to another $60, $70 to the upside. Maybe it comes later, but boy, I'll tell you what, it's a little spooky not to see gold in this environment straight to the moon. So that would be another little tell there. And then looking at the Japanese yen, excuse me. And I'm only going through these markets because these are the ones that we've covered. These are the ones that you should be in, or at least we've talked about getting in and looking for breakouts to the upside. This is beyond breakout to the upside. Why did we cover this? This was last week's sheets. And this is the time to clean up if you got any inventory on. Okay? So just as a review, last week, I mean, you really can't get that much better. Gold, weekly high close doji, yen, daily bullish, euro. I mean, it doesn't get much better, guys. So anyway, that does conclude today's planning and scanning. We'll get back to, hopefully this is not one that we're going to initiate new positions, and perhaps we'll send out a special one for Wednesday, a midweek. This is very impressive, and I'm glad, and I certainly hope everyone was safe and sound in this. Again, we tried to not pick a bottom, but place in some low orders. We'll watch to see how this thing manifests, and this gave us opportunity to cover shorts in here. Very impressive from peak to valley, peak to valley, just over 12% correction.